This is PGI. Please stand by. We're about to begin. Good day, everyone, and welcome to the first quarter 2015 results conference call. Today's call is being recorded. At this time, for opening remarks, I'd like to turn the conference over to your moderator today, Mr. Howard Milliner. Please go ahead.
Thank you, Nadia, and good morning, everybody. Welcome to Wellington's first quarter results conference call. As she indicated, I'm Howard Milliner, Wellington's CFO. You may have seen the company's announcement on the 20th of April, reporting trading results for the first quarter ended 31 March. I will provide some additional comments on this result and on our expectation for the first half. Greg Allen will then provide an update on the progress we've made with our new product development and market launch. I must start with the usual warning. We'll be making forward-looking statements on the call, and these are predictive in nature. They're subject to a number of risks and uncertainties relating to Wellington, its operations, the market in which it competes, and other factors, most of which are beyond the control of Wellington. Actual results and conditions may differ materially from those expressed or implied by such forward-looking statements. The first quarter result was an EBITDA loss of $46,000 on revenue of $6.6 million. The result for the same period last year was a loss of $1.1 million on revenue of $6.6 million. Whilst not a profit, it is without doubt confirmation that our turnaround and growth actions are the right ones, and that Wellington's objective of delivering a profit is within sight. The key features of the quarterly result are 285,000 refrigeration motors were sold in the quarter. That's consistent with the same quarter last year. We sold more of our higher-priced ECR01 motors and fewer of the lower-priced ECR8292 motors. That's been a fairly consistent trend in recent quarters. Revenue from Latin America was $3.3 million US, a 29% increase quarter on quarter. We're seeing a strong recovery in demand from that region, with the exception of Brazil. APAC revenue was up 27%, indicating the progress we're making opening this market to Wellington's products. Europe was strong for us last year, but we're seeing reduced demand this year, which we attribute to the economic challenges in the region. Operating costs were further reduced from $2.2 million to $1.9 million. Gross margins improved from 16.3% in quarter 1 2014 to 22.4% this year. This is due to improved pricing from our China and Vietnam suppliers. Pricing for Vietnam-sourced product reduces again in the second half of this year. Cash at 31 March was 1.4 million Kiwi. Inventory was 3.5 million at 31 March, down from 4.7 million at last balance date. We're now well into quarter 2 and continue to see strong demand out of Latin America and steady new business wins in Asia. Revenue for the first half of 2015 is expected to be in the $12 to $13 million range, and the EBITDA result is expected to be a loss of less than $0.5 million, compared to the $2 million loss on $10.6 million of revenue last year. New Zealand dollar, US dollar exchange rates between now and 30th of June will impact this, as will customers moving demand between Q2 and Q3. This again shows we're delivering continual improvement in the business fundamentals. We have said previously that our break-even point is around 25 million Kiwi in revenue. Our latest forecast doesn't quite get us to 25 million. The seasonal patterns in our business mean that we won't know whether or not this can be achieved until we hear from customers what they expect their demand to be in Q3 and Q4. A break-even result is possible in 2015, but will be dependent on this H2 demand and also on the USD, NZD currency rates going forward and how rapidly customers take up our new products. At this point, I'll hand over the call to Greg to talk about the progress we've made with our new motor and controller products.
Thanks, Howard. Hi, everyone. Today I'm going to focus on our new products, which are commencing first production runs right now, the new customer activity behind them, and I'll also update you on our priorities for 2015. First, I wanted to just thank all of our investors who participated in the recent rights issue. We received around $2.4 million in cash before shareholder approval of the Superlife underwrite, which we think is a good result. This includes around 17 million shares taken up by management and directors, and close to 9 million shares taken up by our strategic partner, East West. This new capital will help us ensure our new product launches are successful. As I've said before, building scale in our business is our number one strategic priority, and this can only be done with new products and new services, and with the help of partners in sales, technology, and supply chain. That is where we are entirely focused. I'm pleased to say we've secured our first order from a Mexican customer for our cloud-connected SCS smart controller. While this is only 400 units and quite small, it does show that this particular customer is committed to adopting our new product and solution. In addition, we are actively discussing commercial deals with other large customers around the globe and have just recently begun expanding our business development activity on the SCS Connect controller into Europe. I've lost count of the number of roadshows and brand conferences we've attended over the last 5 months to demonstrate and promote our connected controller. We are convinced, and our customers confirm to us, that this solution is a game changer. On our new motor, the ECR2, we have clear signals from 2 to 3 major supermarket display manufacturers in the USA, Europe, and Latin America that they will adopt this new motor, and we're making final modifications on the product to meet their needs. The only hurdle now is to complete regulatory approvals and customer product testing, which will take between 3 and 6 months. It is clear that both the ECR2 and SCS Connect will create new sales opportunities and help deliver the scale we need. Just quickly on our priorities for the year and how we're doing against those. First, the SCS Connect product launch and sales. We are building our first 500 units of the SCS Connect in May, and that will scale very quickly beyond May to support planned further field trials with OEMs and brands. And as I mentioned, we're edging closer to commercial agreements with selected customers. We expect sales of our SCS Connect controller to commence in fourth quarter and to really scale next year. On the ECR2 product launch, we are building the first 1,000 of this new motor in June as planned. The ECR2 has passed its UL and CE approvals and is currently entering further European approvals before we sell to our European supermarket customers. We expect those approvals to complete by October and sales to commence in late Q4. Again, scale expected in 2016. Cost reduction. We continue to drive the cost down in our supply chain and are on track with our partner East West for further cost reduction as we cross an agreed volume purchase level at the end of this quarter. We're also seeing competitive cost behavior from our other suppliers, and we expect supply chain costs to continue to reduce as volume grows, and we're on track to our midterm 25% gross margin target. Number 4 was our ECC frame motor, our next product beyond the ECR2 and SCS Connect. We're still planning to complete and deliver samples of this new motor by the end of the year, but this is around a quarter or so later than planned. Unfortunately, we had to put this project on hold for several months as we've deployed our constrained resources onto ECR2 and SCS Connect to make sure we're making changes to meet customer demand for market release. Fifth priority this year was to break even or to get close to it. As Howard has already said, our ability to achieve break even is dependent predominantly on Latin American demand holding up, but also on our second half demand visibility. We are having a strong Q1 and Q2. However, visibility is still low for second half, and we are seeing some reductions from some customers. We think Q3 will be a lower quarter than we've seen in Q1 and Q2, but Q4 will offer some upside opportunity. As I've said in the past, the strategic shift in our growth and profit generation comes from the new products and new services we are launching. So that's where our efforts are focused. We'll update you all further as Q3 develops. Finally, before I hand it over to questions, I think I have to comment on some of the investor feedback I've been getting and get occasionally. I really understand some of the feedback I get and complaints about another capital raising, when are Wellington going to make money, and a feeling of more of the same. Personally, I think it's unfortunate, but I understand that we are measured on a 25-year history of cash burn rather than a 3-year history of positive change. But we do get it. We're a very different company from the company that I hear the stories about pre-2012. We now have a low-cost, fully outsourced supply chain. We have new products, not products that are 6 years old, developed with connectivity, efficiency, and cost at the core. We have a product pipeline beyond the SDS Connect and ECR2 that will continue to deliver growth. Our working capital management has never been better, with much improved supplier terms and inventory levels a good $8 million lower than they were at the end of 2011, and they've stayed that way pretty much. We have a new board and management skills that can help us become profitable. We have a strategic partner in East West that's helping us transform our supply chain and helping us grow, and our other supplier partners are bringing cost and product ideas to the table. We've certainly made some mistakes over the last 3 years for sure, but fundamentally the business is different, better, and we think on the right track to deliver the scale we need to ultimately be profitable. Thanks everyone, that's it from me, and I'll hand it back to the operator for questions.
Thank you. We'll now begin the question and answer session. If you wish to ask a question, please press the star key followed by the number 1 on your telephone keypad and wait for your name to be announced. We'll pause a moment to assemble a queue. Once again, to queue for a question, please press star 1. There appears to be no questions at this time.
Okay. Just a few closing comments. Thanks everyone for listening today. We're really excited by what's happening in the market on our new products, and hopefully over the next 3 to 6 months we can let you know how those sales plans are going and how those new products are being adopted. So I look forward to talking to you all at our next, at our AGM on June the 11th. Those of you who can make it, and at our next quarterly conference call. Thanks and have a good day.
That does conclude our conference for today. Thank you for participating. You may all disconnect.